Right now, there are people quietly accumulating XRP who genuinely believe this asset could reach four digits, and not in some distant fantasy timeline, but within a structural shift in the global financial system that most retail investors still don't fully understand. And the real question is not whether XRP can hit $1,000, but what exactly needs to happen behind the scenes for that kind of valuation to even make sense. Because if you break it down logically using market capitalization, liquidity flows, institutional adoption, and cross border settlement demand, you start to realize that this isn't just about price speculation. This is about a complete transformation in how money moves globally. And today we're going to walk step by step through the actual timeline, the catalysts, and the hard truths that most influencers avoid because they either don't understand them or they're afraid it might slow down the hype. When you hear a number like $1,000 per XRP, your first instinct should not be excitement, it should be skepticism, because at current circulating supply levels, that kind of price implies a market capitalization in the tens of trillions of dollars, which would place XRP not just above Bitcoin, but above entire asset classes like gold. And this is exactly where most content creators lose credibility because they throw out massive price targets without explaining the underlying financial mechanics that would support such a valuation. So let's break this down properly, starting with the basics of market cap and liquidity, because without understanding this, everything else becomes meaningless speculation. XRP currently operates as a bridge asset designed to facilitate cross border payments through Ripple's on demand liquidity system, which essentially replaces the need for pre funded Nostro and Vostro accounts that banks traditionally use when transferring money across borders. And this is important because the global cross border payments market is massive, estimated in the hundreds of trillions annually when you include institutional flows, remittances, and interbank settlements. But here's the part most people ignore: XRP does not need to capture all of that volume to increase in price. It only needs to capture enough consistent liquidity demand where institutions are actively using it as a settlement layer. And that demand creates upward pressure on price through reduced available supply and increased transactional velocity. Now, here's where things get interesting, because for XRP to realistically approach a $1,000 valuation, it cannot rely on retail speculation alone. That kind of move requires institutional capital, and not just small hedge funds or crypto native firms, but large scale financial entities like central banks, multinational payment processors, and potentially even government backed financial systems integrating XRP into their infrastructure. And this is where Ripple's partnerships and regulatory positioning come into play, especially in regions where cross border payment inefficiencies are a major problem. Because if XRP becomes a standard for liquidity bridging between currencies, its value proposition shifts from speculative asset to financial utility, and that changes everything about how it is priced. However, there is a major constraint that needs to be addressed, and that is regulatory clarity, particularly in the United States, because without clear classification as a non security asset, large institutions are not going to allocate serious capital into XRP at scale. And this is why the legal battle involving Ripple has been one of the most critical factors influencing XRP's price trajectory over the past few years, because regulation doesn't just affect price sentiment, it determines whether institutional money can legally enter the market. And without that capital, the path to $1,000 becomes extremely unrealistic. At the same time, you also need to consider tokenomics, including the total supply of XRP, escrow releases, and the rate at which tokens enter circulation, because even with strong demand, excessive supply can suppress price growth. And this is where long term holding behavior and institutional custody solutions could play a role in reducing circulating supply. effectively creating a scarcity dynamic that supports higher valuations over time. But again, this is not something that happens overnight. It requires sustained adoption, consistent demand, and a broader shift in how financial systems operate globally. So if you're looking at the $1,000 XRP narrative, the key takeaway from this first part is simple. This is not a short term price target driven by hype cycles or retail momentum. This is a long term scenario that depends on structural changes in the global financial system, institutional adoption, and regulatory clarity. And without these factors aligning, the probability of reaching that level remains extremely low, regardless of how bullish the market sentiment becomes. Now that you understand the basic reality behind market capitalization and why retail hype alone cannot push XRP anywhere near a 4 digit valuation, the next step is to break down the actual timeline logic, because this is where most people completely lose the plot and start believing that a move to $1,000 can happen in a single bull cycle, which is not just unrealistic. It shows a lack of understanding of how capital flows, liquidity cycles, and institutional adoption actually work in financial markets. And if you don't correct this thinking early, you will end up making poor decisions based on emotion instead of strategy. The first phase in any realistic XRP growth timeline is what we call the speculative expansion phase. And this is where the broader crypto market enters a bullish cycle driven by macro factors such as monetary easing, increased liquidity in global markets, and renewed retail interest. And during this phase, assets like XRP can experience significant price appreciation. But this growth is primarily driven by sentiment, momentum trading, and capital rotation rather than real world utility, which means prices can rise quickly, but they are not stable. And this is exactly why you see sharp rallies followed by aggressive corrections in almost every crypto cycle. In this phase, XRP could potentially revisit previous all time highs and even push beyond them, especially if there is positive news related to regulatory clarity or Ripple partnerships. But expecting anything close to $1,000 at this stage is completely detached from reality, because the infrastructure required to support that valuation simply does not exist yet. And more importantly, the market has not matured enough to sustain that level of capital inflow without collapsing under its own volatility. Moving into the second phase, which is far more important but often overlooked, we enter the institutional integration phase. And this is where things start to shift from speculation to utility, because institutions do not operate on hype, they operate on efficiency, cost reduction, and regulatory compliance. And for XRP to gain traction here, it must prove that it can consistently handle large scale transaction volumes while maintaining low costs, high speed, and regulatory transparency. And this is where Ripple's technology, particularly its liquidity solutions, becomes a critical factor. During this phase, you would expect to see increased adoption from payment providers, banks, and financial institutions that are looking to optimize cross border transactions. And this adoption would not necessarily create explosive price movements overnight, but it would create consistent demand, which is far more valuable in the long term because it stabilizes price growth and reduces volatility. And this is the kind of environment where serious capital begins to accumulate quietly without attracting excessive retail attention. However, here's the uncomfortable truth that most XRP holders don't want to hear. Institutional adoption is slow, bureaucratic, and heavily dependent on regulatory frameworks, which means this phase could take several years to fully develop. And during this time, price action may appear underwhelming compared to other speculative assets that are experiencing hype driven rallies. And this is where weak hands get shaken out because they expect immediate results without understanding the bigger picture. The third phase in this timeline is what we can call the liquidity dominance phase. And this is where XRP's role as a bridge asset becomes deeply embedded within financial systems, potentially handling a significant portion of cross border settlement flows. And if this level of adoption is achieved, the demand for XRP would increase substantially because it would be actively used as a liquidity tool rather than just held as a speculative investment. And this is the point where higher price levels begin to make more sense from a fundamental perspective. But even at this stage, reaching $1,000 would require not just adoption, but dominance, meaning XRP would need to capture a meaningful share of global liquidity flows. And that is not something that happens quickly or easily because it involves competing with existing systems, regulatory bodies, and alternative technologies that are also trying to solve the same problem. And this is why timelines matter, because without understanding the progression from speculation to integration to dominance, you end up expecting outcomes that are completely disconnected from reality. So, when you look at the idea of XRP reaching $1,000, the key takeaway from this part is that it is not a single event. It is a multi phase process that could span several years or even decades. And if you're approaching this with a short term mindset, you are setting yourself up for disappointment because the kind of transformation required to justify that valuation is not driven by hype. It is driven by systemic change in the global financial ecosystem. Now comes the part most people either ignore or deliberately avoid because it completely challenges the popular narrative, and that is the mathematical reality behind a $1,000 XRP valuation. Because if you don't understand the numbers, you are not investing, you are just gambling based on hope. And hope is not a strategy in financial markets, especially in a space as volatile and narrative driven as crypto. So let's break this down in a way that actually makes sense from a macroeconomic and liquidity perspective. At a $1,000 price point, XRP's total market capitalization would reach into the tens of trillions of dollars depending on circulating supply. And that immediately raises a serious question. Where exactly is that capital going to come from? Because money does not appear out of thin air. It flows from one asset class to another based on incentives, efficiency, and perceived value. And for XRP to absorb that level of capital, it would need to become a core component of the global financial infrastructure, not just a popular cryptocurrency among retail investors. This is where the concept of liquidity versus market cap becomes critical because many people assume that for XRP to reach $1,000, there needs to be trillions of dollars sitting inside the asset at all times. But that's not entirely accurate. What actually matters more is the volume of transactions flowing through the network and the role XRP plays in facilitating those transactions. Because if XRP is being used as a bridge asset for large scale settlements, even relatively small amounts of XRP can handle significant transaction volumes due to rapid turnover. And this is often referred to as velocity of money within a network. However, here's the catch that most influencers conveniently ignore. High velocity can actually reduce the need for extremely high prices because if XRP is moving quickly and efficiently between parties, the same tokens can be reused multiple times, which limits the upward pressure on price unless there is a mechanism that restricts supply or increases holding demand. And this is where the narrative becomes more complex. Because for XRP to reach extreme valuations, it cannot rely solely on transaction utility. It also needs a reason for participants to hold large amounts of XRP rather than just using it momentarily. This introduces the idea of liquidity locking and institutional reserves, where financial institutions might hold XRP as part of their liquidity management strategy to ensure they can process large transactions instantly without relying on external markets. And if multiple institutions begin holding significant reserves, this could reduce the available circulating supply and create upward pressure on price. But again, this is not something that happens overnight. It requires trust, regulatory clarity, and proven reliability at scale. Now, let's address another uncomfortable truth. the comparison with other assets, because if XRP is expected to reach a valuation in the tens of trillions, it would need to compete with or surpass assets like global equities, sovereign debt markets, and even traditional reserve assets. And that is a massive leap because those markets are deeply entrenched in the global economy with decades of infrastructure, regulation, and institutional trust behind them. And for XRP to disrupt that system, it needs to offer not just marginal improvements, but a fundamentally superior solution that is widely adopted across multiple sectors. At the same time, you also have to consider external factors such as competition from other blockchain technologies, central bank digital currencies, and evolving payment systems that could either complement or replace the need for a bridge asset like XRP, because the financial world is not standing still waiting for XRP to take over. It is actively evolving, and multiple players are competing for the same space, which means XRP's success is not guaranteed, regardless of how strong its current positioning might appear. So, when you step back and look at the full picture, the idea of XRP reaching $1,000 is not impossible in a theoretical sense, but it requires a very specific set of conditions to align, including massive institutional adoption, significant supply constraints, and a dominant role in global liquidity flows. And without these factors, the numbers simply do not add up, no matter how bullish the sentiment becomes. And this is exactly why you need to separate realistic long term potential from short term hype. Because if you don't, you risk building expectations that are not supported by financial reality. Now we get into the part that separates serious investors from emotional holders, and that is understanding the real world catalysts that could actually push XRP toward extreme valuations over time. Because without clear catalysts, all you have is speculation, and speculation alone cannot sustain long term growth at the scale required for something like a $1,000 price target. So instead of focusing on hype, you need to focus on the specific events and structural shifts that would need to occur for XRP to move into that category of global financial relevance. The first and most critical catalyst is regulatory clarity in the United States. And there is no way around this because the US financial system plays a central role in global liquidity flows. And without clear legal classification, XRP remains limited in terms of institutional adoption, particularly among major banks, asset managers, and payment processors that operate under strict compliance requirements. And this is why the legal developments surrounding Ripple have had such a significant impact on XRP's market behavior, because every step toward clarity reduces uncertainty and increases the probability of large scale capital entering the ecosystem. But here's the reality most people overlook: regulatory clarity alone does not guarantee adoption, it simply removes a barrier. And once that barrier is removed, XRP still needs to prove that it can outperform existing systems like SWIFT in terms of speed, cost efficiency, and scalability. And this is where Ripple's technology stack, including its on demand liquidity solution, becomes a key factor. Because if institutions can reduce settlement times from days to seconds while also lowering transaction costs, the incentive to adopt becomes much stronger, especially in high volume corridors such as US to Asia or Europe to emerging markets. The second major catalyst is institutional integration at scale. And this is where things move from theory to execution, because it's one thing for a few financial institutions to experiment with XRP, and it's an entirely different scenario for it to become a standard part of global payment infrastructure. And for that to happen, you would need to see consistent usage across multiple jurisdictions, interoperability with existing financial systems, and strong support from regulatory bodies. And this is a slow process that involves not just technology, but also policy, risk management, and operational alignment across different regions. Another important factor is the evolution of global liquidity needs, because as international trade continues to expand and financial systems become more interconnected, the demand for efficient cross border settlement solutions will increase. And if XRP is positioned correctly within this environment, it could capture a significant share of that demand, particularly in corridors where traditional systems are inefficient or costly. But again, capturing demand is not enough. It needs to retain that demand over time, which means maintaining reliability, security, and cost advantages over competing solutions. Now, let's talk about something that rarely gets discussed in detail, and that is competition, because XRP is not operating in a vacuum. And while it has a strong use case, it is not the only player trying to solve cross border payment inefficiencies. You have central bank digital currencies being developed by multiple countries. You have other blockchain networks offering fast and low cost transactions. And you have existing financial systems that are continuously upgrading their infrastructure. And this means XRP's path to dominance is not guaranteed. It must consistently outperform alternatives to maintain its position. There is also the factor of market psychology and capital cycles, because even if all the fundamental catalysts align, price movements in crypto markets are still influenced by investor sentiment, macroeconomic conditions, and liquidity cycles. And this means that XRP's journey toward higher valuations will not be linear. It will involve periods of rapid growth followed by corrections. And if you are not prepared for that volatility, you will likely make emotional decisions that work against your long term strategy. Finally, you need to consider the role of long term holding behavior, because for XRP to reach extreme price levels, a significant portion of its supply must be held rather than traded frequently. And this is where institutional custody solutions, staking alternatives, or other incentive mechanisms could play a role in reducing circulating supply and increasing price stability over time. But again, these are developments that require time, trust, and adoption at scale. So when you look at the path toward a $1,000 XRP, the key takeaway from this part is that it is not dependent on a single event or announcement. It is the result of multiple catalysts aligning over an extended period, including regulatory clarity, institutional adoption, competitive positioning, and evolving global liquidity demands. And without these factors working together, the probability of reaching that level remains extremely low, regardless of how strong the narrative becomes in the short term. Now, after breaking down the numbers, the timeline, and the real world catalysts, it's time to confront the most important question directly without any hype or emotional bias. And that is whether a $1,000 XRP is actually a realistic outcome or just a narrative that keeps circulating because it attracts attention and drives engagement. And the honest answer sits somewhere in the middle, because while it is not impossible in a theoretical framework, it is extremely conditional and heavily dependent on factors that are outside the control of retail investors. Which means if you are positioning yourself based purely on that target, you are taking on a level of uncertainty that most people don't fully understand. At this stage, you need to shift your mindset from price obsession to probability and strategy, because focusing only on a $1,000 target can actually blind you to more realistic opportunities along the way. And this is where most investors make a critical mistake. They ignore intermediate price levels that could offer significant returns simply because they are fixated on an extreme outcome that may or may not happen. And in financial markets, especially in crypto, success is usually built through disciplined decision making rather than waiting for a single life changing event. If you look at XRP from a strategic perspective, the more reasonable approach is to break its potential into phases of growth based on adoption, market cycles, and macroeconomic conditions, where each phase offers its own opportunities and risks. And this allows you to adapt rather than hold blindly based on long term speculation. Because even if XRP never reaches $1,000, it could still deliver substantial returns if it captures a meaningful share of cross border liquidity markets and continues to build institutional partnerships over time. Another point that needs to be addressed clearly is the role of market cycles, because crypto markets operate in cycles of expansion and contraction. And during bullish phases, narratives become exaggerated and price targets become increasingly unrealistic, while during bearish phases, sentiment collapses and even strong projects are undervalued. And understanding this cycle is crucial because it allows you to position yourself more effectively rather than reacting emotionally to price movements. And if you are expecting XRP to go from current levels to $1,000 in a straight line, you are ignoring how markets actually function. There is also the issue of risk management, which is something rarely discussed in XRP focused content because it doesn't attract views, but it is essential if you are serious about long term success. Because no matter how strong a narrative appears, there is always the possibility that it does not play out as expected, whether due to regulatory changes, technological competition, or shifts in global financial systems. And if you are not prepared for those scenarios, you are exposing yourself to unnecessary risk. At the same time, it is important to recognize that XRP does have a unique position in the market compared to many other cryptocurrencies, particularly due to its focus on real world utility and its connections to financial institutions. And this gives it a different risk reward profile compared to purely speculative assets. But again, potential does not guarantee outcome. And this is where disciplined analysis becomes more important than emotional conviction. So when you step back and look at the full picture, the idea of XRP reaching $1,000 should not be treated as a prediction. It should be treated as a scenario, one that requires a specific combination of regulatory clarity, institutional dominance, global liquidity integration, and long term holding dynamics. And while that scenario is not impossible, it is far from guaranteed. And the smarter approach is to stay informed, remain flexible, and make decisions based on evolving market conditions rather than fixed expectations. This content is intended for informational and educational purposes only and should not be considered financial advice, as cryptocurrency markets are highly volatile and involve significant risk. And before making any investment decisions, it is important to conduct your own research, evaluate your financial situation, and consider consulting with a qualified financial professional to ensure that your strategy aligns with your risk tolerance and long term goals. And if you found this breakdown valuable and want more clear, data driven insights like this on XRP and the broader crypto market, consider supporting the content by liking the video and subscribing to stay updated with future analysis.